Hello there. After dealing with candlesticks and Elliot Waves theory and other major concepts with binary options, it is time to look at some popular indicators to demonstrate that taking an option or trading an option is not that big a deal as long as we know what we are doing and we know what we expect when it comes to risk and managing the overall situation. Now, one of the most popular indicators is the Bollinger Bands indicator. As a trader, no matter your background, it's virtually impossible not to know or not to hear about Bollinger Bands, as it is again one of the most popular among retail traders. Now, what it is in the first place, let's put it on the screen. We'll have a two-part video with two ways of trading with Bollinger Bands, explaining the concept and how to use it in practical examples. Now let's go and add an indicator here. On this trading platform, the Bollinger Band appears under the overlap studies. See here the first one, B-Bands, Bollinger Bands. But on the MetaTrader, for example, if you open the MetaTrader, which is the most popular trading platform for retail traders, you can find it for free all over the internet, basically with any broker. You can download it for free. Anyways, you can find it on the trend indicators. What does it mean, a trend indicator? Trend indicator means that, take a look in here, it will appear on the actual candles. Whereas if you go and trade with momentum indicators or oscillators, these will appear at the bottom of the screen here, showing you a different type of indicators. Anyways, let's come back to Bollinger Bands. And on the Bollinger Bands, you see that we have three lines here. The upper line, the blue one, it's called the upper Bollinger Band. Then you have the lower Bollinger Band, and then you have the middle Bollinger Band. Now, this middle Bollinger Band is very important. Typically, it is a moving average. Now, you have various types of moving averages. You have a simple moving average, as an SMA or an EMA, an exponential moving average, or a DMA, a displaced moving average, and so on. I would recommend for this one to be an EMA, a classic EMA, 20 periods, and then the other Bollinger Bands would adjust for itself. You can set up the type of the moving average with the setups before plotting the indicator also on the MetaTrader. Now, look at it. It virtually follows the price, right? Follows the price because it comes into the category of trend indicators. It means that it follows the trend. So we look for market to move in the same direction as long as it stays in a bullish range. The idea is very simple with the Bollinger Bands. You simply go and look at the upper side of the Bollinger Bands, and as long as price stays there, that's a bullish case. So let's say here that this is a rising bullish channel. Therefore, any pullback that the price might give should be used as a great place to go and buy what? Call options in the case. But again, mind the time frame. This is the daily chart. It could easily be the 4-hour chart, but we'll have some other examples a bit later in the second part of this analysis dedicated to the Bollinger Bands. Now, the idea here is to watch the price action, around the EMA, around the moving average here, because that's a great place to go and buy call options. As simple as that. Number one, let's say not really here, because the market dipped below and then it goes and pierces the upper side of the Bollinger Bands, the upper Bollinger Band, and then stays into the bullish channel. But this here would be a great place to go and buy call options. Number one, 2 times, no more than 2 times, exactly like we discussed on the moving averages. Then it comes again back. It comes again backwards. It goes bullish, comes for the second time. We go long here or we buy a call option, and that's it for trading with the Bollinger Band, in the sense that it is dangerous to keep going and adding in the same direction, because with every pullback into the EMA, the strength of the trend weakens. Now maybe this Euro US dollar on the daily chart wasn't the best example, in the sense that the trend here on the daily chart was really staggering. For the whole 2017 summer, it jumped in almost a vertical line from 104 before the French elections all the way to 1.20. This rarely happens even on the FX market. And not to mention on a currency pair that is so important like the Euro US dollar. Now this is the overall idea with the Bollinger Bands, the classical way to trade with Bollinger Bands. What traders fail to do is that they don't stop after 2 times when price comes into the signal area. They go and buy here as well, a call option. They buy another call option here as well, another one here as well. So they don't stop. But imagine that. Take a look how many currency pairs we have here, how many products. Take a look how many time frames we have here, how many products. So you will have plenty of opportunities to trade this easy setup no matter what. On the second part, we'll look at a different way to use the Bollinger Bands, a bit unknown, I would say, and we'll look at some more examples with this simple concept. Stay tuned for the second part.